The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman here. This is Tuesday. Tuesday the what? Tuesday the 27th of July. Just about to wrap up the month and the week. And what we're looking at is the Dow closed yesterday at 35,144, an all-time high. Pulled back quite sharply this morning. The futures are actually, the Dow futures are now down 85. What's really important is within the context of what we're looking at, there is no dark news cloud cover at the moment. There are a whole bunch of things sitting there waiting that could become certainly could become big negatives for the market. But at this particular point, we are really looking at the market holding extremely well. Some of the indices going to all-time highs. And what we're going to be looking at this particular point is the pattern that's been in extant since last Tuesday is that the low, and I'll show you this is really fascinating, the low has been made early in the morning, overnight in fact, almost every single day. Even here, we can look at about 3:30 this morning. The low was made right here. There it is. In the E-mini, you can see this is a 10-minute chart at 4390.50. And here we are. It goes to peak A, peak B, peak C, and a peak D. Remember the Chapman methodology? Ds are really important. The fourth highest peak. Look at that peak D at the high, all-time high yesterday of 4416.75. At 4, that was 10 to 5 actually, and from that moment on it went down sharply, went all the way from the 44.15 area to the low so far today of 43.90, and then you come back again, and that's what I'm going to be teaching in my webinar coming up on tomorrow. Tomorrow, that's the second part of my 2-day webinar. That's at 10 a.m. to noon time, Eastern time, live. We'll do 2 hours. We've had a number of the attendees who were participating a week from this past Wednesday. So I gave them 2 weeks in which to practice the techniques that we discussed all day. And now we're coming to this conclusionary place where we start to see how did it all work out? What is this big spike to the upside that's called a right arm extension, and then it fails at a peak F, and what are you looking for? What techniques? I discussed techniques that could get you into a trade early in the morning and keep you in that trade almost all day, one trade. We've seen that for 4 sessions. This is the 5th session, actually, from this particular low. And what can give it to you? Anyway, so let's get on to our today's, we're looking at in the E-mini, this is really interesting. I've had alternate counts in all these different indices, an alternate count right here in the continuous contract, went to a peak C. There's no other way I could count it right there at an all-time high on the 14th of July at 43.8450, pulls back very sharply to the 42.30s, and then it rallies. And here it is at 4406.75 after making a high yesterday. I call that D, but look at this. If you go to the E-mini contract, this is the September contract, that became a G, this became a pullback, and this has to be a new leg B. So as it stands right now, I have to consider that there's enough energy for the market to go up through July, maybe into the first week of August. Can you believe I'm going to say this? I keep looking at it and say, is that even possible to go from 2191.86 in March of 2020 all the way to this is only a leg B. There's only been one peak in the monthly chart. This is still leg B. And if it goes into August, it means that you cannot get a peak D because there's a buy signal almost always goes to a peak D or higher. That means to get to that fourth highest peak, it would take you until January of 2022. So that's very bullish, regardless of how sharply we could pull back. And believe me, if interest rates bother the market, if the semiconductor, the chips, if in fact it turns out that the shortage is a lot worse than people have been thinking it is, or what was the third? Oh, the virus I mean, we've got COVID, which we thought was under control, and now you've got a variant. And this Delta variant, in fact, could create. So a bunch of things could come together. They aren't together right now. And that allows enough room to continue a little bit higher for a little bit longer. And then I think we're going to have a pullback that I think it'll take a little more time and maybe even a little bit more price than we've seen before. We only had a one-day pullback, in fact, in the Dow from the all-time high. Look at this. INDU. Look at this. The Dow makes a high on Friday, the 16th of July at 35,090. And it's only that Monday that there's really a sharp down day as a fresh start because you made a new high, even though the Dow closed down sharply on Friday. It was that Monday that slumped down to 33,981. And here we are, as if you'd gone to sleep, Rip Van Winkle, and you go to sleep, you wake up, you say, oh, what a lovely day. Not knowing that there was, whatever it was, earthquake or whatever. So this is what we're looking at. Now what's important, are we going to double top? Are we going to turn around? I think there's enough energy to at least try to keep going a little bit higher. Look, this is the Chapman wave inside track repellent zone. This is green and red mini channel, and we've gone just above it. There's a potential that you do make an arch formation, but so far it looks like it's really the V-shaped formation that has a right shoulder extension. Does that in the S&P. Look at this, the S&P sharply higher. This is like almost a fresh start, right? But is that a fresh start, an A or a C? Well, we'll talk about that in a moment. But let's look at the QQQ, NDX 100, trading at 368.46, down just 3 cents right now. Made an all-time high of 368.89 yesterday. What is that wave count? Is that an A? Does that mean we've still got another? We haven't even made a peak yet. That we've still got to go to peak A, peak B, peak C, and peak D, and then we have to worry, or is this just a single leg A up failure pattern? We'll talk about that in a moment, but let me just finish this up. IWM has been lagging the crowd. The iShares Russell 2000 ETF, this is the small caps, were leading the market all the way up until the the June 9th high of 233.64. Plummets down to the 207 area, 208, and now it's trading at 220. It really needs to get above 222, and it needs to do that soon because it's lagging. But it is in the rectangle formation in the weekly chart. Let's go to gold. Gold is at this point up 3 at 18.01. It's in this trading range, just a very narrow trading range. This is the kind of move that says, well, could be a sudden quick pop to the upside. But you've got to watch the support, and the support is at 1780. It's at 1802 right now. Silver is, did I mention that I'm doing this show now at 8 o'clock? This is 8 o'clock in the morning. So right now it's 8:14 a.m. And because I'll be doing a Tom's show at 3 p.m., so I just needed to organize my time a little bit better. So my show, I believe this might be recorded for my show at 10. So we're looking at pre-market, and the silver is down 0.04 at 25.27. It's making lower lows and lower highs. It's underneath this Chapman wave reverse falling axe formation. It's got to get to the support. It really has to get to 26.15, and needs to do that fairly soon to say that, okay, I'm trying now to get back onto the upside path, because right now I'm making lower lows and lower highs. Just as we go to the break, so crude oil is trading up 3 cents at 71.94, holding quite nicely. There's the Chapman wave inside track coming.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Basil Chapman doing an early edition of my Tiger Technicians Hour. And don't forget my newsletter is called The Opening Call. And I will be doing my second part of my webinar tomorrow between 10 and noon. And there's still time to join. Check the front page of TFNN. TLT, this is the Lehman 20-year Treasury Bond Fund. It's up 97 cents at 149.03. It made this island reversal up at 152.72. Peak D, remember peak D is where other things can happen, and a pullback sharply, but it's still holding pretty well now. It is in leg E in the weekly chart, and this pattern says usually you start to come down quite sharply, with that which would mean that yields are going to go higher. We don't know yet, and what will happen is the 200-period moving average of 146.50 is key. If it starts to trade in the next week underneath 145, closes under 145, that suggests that, yes, yields will go high. If you're looking at the TNX, TNX.X, that is the yield. It's made a little peak A and then a leg B to the upside. In fact, if you're looking at a number of things, I was just asked about Exxon. Look at this. See the pattern here? You see this is a peak A right here, peak A. And this is a leg B because you have to wait for the entire day to see if there's going to be a peak. Well, look at ExxonMobil. It did exactly the same thing, sharply down. Goes to almost the 200-period moving average. It's gone to a leg A, pulls back, peak A, leg B, and it's all gray because it's way under. All the technicals are still very, very weak. And this has to do, of course, partly with crude oil, but it's really almost independent in a sense because it's the demand that's the economy requires of oil that would really dictate what ExxonMobil is going to do, multinational oil company. I suspect that it is going to bounce a little bit more, maybe get to the 59, 60 area if crude oil is able to hold here without pulling back sharply. And then I think it comes back and does a retest of the 54s. Getting ready maybe for a little later in the year when I think there'll be a bigger move to the upside. And that corresponds with the XLE. Look at the XLE. Leg E, leg A, peak A. Leg B, peak B. So it all corresponds. So we even saw this in Bitcoin. I know we're jumping around here, but Bitcoin did the same, peak A, peak B, and then it just came with a dreaded H pattern, lowercase h, ran right away. It held the low, and then it had a big spike. Today's down 1545 after like 6,000 points to the upside yesterday. That actually, I need to count that. So let me just see. This is the Bitcoin itself, the futures. So the low is 30, So it's 28,870. 28,870. 29. So this becomes a leg C to the upside. Yeah, for subscribers, we are still long. We've been long since the equivalent of the 12,400s. Screamed up to the all-time high of 65,520 on the 16th of April. Just cascaded lower to the 2800s. And now what we're looking at is it's just trying to find some support. And what I said is I can see later, like a little later in the summer, that there's a bigger move in Bitcoin. But at this particular point, I'm anticipating sudden spikes up and then it kind of gives it back. We'll see if that's correct or not. But in the meantime, we only have a core position. We've taken profits all the way up. So Exxon needs to hold. So I suspect that because of this move that we've just seen over the last 2 days, which went to the 14-period moving average, that at 58.48 yesterday and 58.31 today, we're looking at how it acts over the next 2 days. If by Thursday at about 1 o'clock, 2 o'clock, if it's under 57.50, it just says, be careful, it's stalling, it's in this rectangle formation, it's going to hang around in this area for a little while longer. But the island reversal, it isn't quite an island reversal because it did foot it a little bit. But this big move up is really important because if Exxon can get to 59.50 by Thursday, I would think that the low that was made here is a low, not the low, but it's a low of some significance in that it could form an even bigger arch formation. So that's important right here. So the next question I had was where did it go? Yeah, so I'm not sure if Triple M has earnings this morning. It's up $1.33, 203.00. But here's this Chapman Wave inside track repellent zone. Look, this is what I'm going to be teaching, have been teaching. This is what I talk about all the time. And tomorrow in the webinar, we'll go through this in much greater detail. Here's the inside track repellent zone. Hasn't been able to push higher, but if it does, it turns the 201 area into support if it's able to get to 204.50. Certainly by Friday, anytime between now and Friday, if it's able to hit, I say 204.50. If it touches 205, that is really good action, and that puts it into the rectangle that makes an arch formation, a cup formation in the weekly chart. If it pulls back, the 200 to 199 area is really important support to hold. And I'm not sure if the earnings did come out. A couple of questions I had about the XLF. Let me just do that now. XLF, yeah, it's just in this range. And as long as, if yields start to go higher, I think that it helps the financials. I do like the financials looking out. But at this particular moment, it is, oh, yes, they did come out with their numbers as AM. Okay, good. So let me just see. I'm going to go back 1, 2, 3, Triple M. And then I can go right here and I can see what it is. News, click. Trade Station, I don't think they have the best information. They get it, but it's usually, I like some other mediums have them better. 3M earnings results, 3M sales growth of 24.7% year over year to 8.9 billion with organic local currency sales growth of 21.4, beating the consensus estimate of 8.55 billion. Well, you know, this is really important because Triple M is kind of the, how can I put it? In a way, it used to 3M, Triple M mining. I mean, this used to be a cyclical, a deep cyclical, in fact. And then all of a sudden, you know, with notes, sticky notes and all that, it becomes different. During the COVID, they made the masks. So there's a difference. So I love the fact that Triple M is acting well right here. This is really important. We actually we started a position the other day, took a very tiny loss, but I just decided it was stuck in this range until it really showed higher highs and higher lows. We just sort of step aside. We'll see what happens. But in the meantime, back in the range, I'm really pleased that it had good earnings because within the context of the Dow type stocks, it's one of the few left, one of the older ones that's left in the Dow. And these good numbers are really important. A couple of things I wanted to talk about. I did the bonds, high-grade copper. High-grade copper we always look at. High-grade copper is at 4.5655. It's about unchanged. It's in Lake C. It's had a really nice move. To me, this is important because if we can get HGX, which is the home, I usually put these things together. If home builders, which are at 469, this is the Philadelphia Housing Sector Index, had a pretty big pullback from the peak weekly high of 538.36, comes down to the low of last Monday or Tuesday at 444, trading now at 469. If this index, despite what's going on in the general market, if this index can start to push into the 483, 488 area over the next week and a half without taking out 460 support, 460 support, and it's at 469 right now, I think that's a good sign. We'll be back in a moment. Basil Chapman doing an early show. This is now 8:26 in the morning instead of 10:26, and I'll be back in a moment.
Are you looking for a way to consistently add winning trades to your portfolio? Tom OBrien is here to help. Tom OBrien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom OBrien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom OBrien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom OBrien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi folks, we're back. So this is Basil Chapman. This is the Tiger Technicians Hour. This is the early edition. It's at 8:30 instead of 10:30. I needed to do the show early today, and I'm the guest. I have the honor, the guest of the Tom OBrien show. I'll be doing that at 3 p.m. this afternoon. Just let me show you a couple of things here that I'll be talking about in my webinar, my second part of my two-part webinar for attendees. We did an all-day one Wednesday a week ago, 2 weeks ago, and this Wednesday is the follow-up. Had questions coming in, and we'll be covering a lot of them. But look at this important moving average here. Do you need it? No, you don't need it once you are far away. But once you get close, look, peak D in the Chapman wave methodology, that fourth highest peak is where other things can happen. That's where you can get a deeper pullback. That's where you can recycle and go higher. That's where you have to do a little bit of analysis, because the easy part's done. You've identified the low, and now you've gotten a move to that fourth highest peak. And look what happens. I discussed it in great detail, and I'm going to be doing it again tomorrow. This flat top, look at this rectangle. A narrow rectangle can last a lot longer than your patience. Very often it comes up, and then it breaks out to the upside. Well, look at this thick line here. This moving average is really fantastic support. And what happens is this support holds, and then it becomes a propellant as the market moves up, recycles. And this is the E-mini 1 minute chart. This is yesterday, I believe it was 6:10. Let me just go through it. Yeah, the 27th. Oh, this is 6:15 on the 27th. Today's the 27th. I've done so much more work since earlier this morning that I'm kind of lost. Yeah, so then it breaks out. It goes to another peak D, recycles, goes ABC, another D, goes to an E, and then it turns around, makes another flat top, and then it pulls back, goes into this rectangle formation, pops just once to a leg F, and then it pulls back. And you remember that line that you didn't even have to care about anymore? Look at this, look at this, look at this, look at this. All of a sudden, you get your Chapman wave dreaded H. What's the dreaded H? This is the pattern that we always look at. If it takes out the left side low, you come down. It's red, because if you take out that left side low, you can go quite a bit lower. You've got to watch this closely. It's called the dreaded H. So the lowercase h pattern, there's your lowercase h pattern. What happens? Oh, that line that you forgot about over there suddenly becomes really important, and it holds and it holds and holds, and then plop, you go under it. So these are the things we'll be discussing, to these patterns that repeat over and over. You remember what I said, that a peak D is really important. Here's your peak D. This is a peak D at the high yesterday, just after 4 o'clock in the E-mini 10-minute chart. Comes down to a trough F, and where does it go to? A peak D. And look at this sharp pullback occurring right now. So I can now put a down arrow because it's closed under certain key moving averages. That's what I'll be teaching tomorrow. But every morning, every single morning, you've had the low. Look at this. The low was at 4 o'clock yesterday morning, and look what happened. When we were on at 9 or 10, I said, look, you've made a low. That's a low that could be of significance, and ran up all day. There are moving averages that can keep you in a trade a lot longer than you ever thought, and that's what we'll be discussing tomorrow. Let's get back to our nitty-gritties here. A question came in. Could I look at, where was it? CLF. CLF, well, first of all, I've got Baidu right here, a peak D in the daily, up at about the 210 level. It's trading out 162, 40 points lower. And there's your dreaded H. This is a lowercase h that goes to a lowercase m and then takes out the low. And look at this. This is the FXI, because China's doing a whole bunch of things that are really, really irritating the Chinese market. Well, I think they want to do that, and they're teaching that market a lesson. Look at this peak D doji candle in the FXI. This is the iShares China large cap. Large cap makes this high in the 54 area. Actually, the high was 54, 53, the week of the 19th of Feb. And dreaded H, lower, lower, low, dreaded H, lower, low, and another one. And now it's in leg E to the downside in the weekly chart. It's trading at 40. It was at 54. This is the index. I'd be real careful. You know, one of the reasons for subscribers to my opening call, I hardly ever have Chinese stocks is you just don't know. And some of them have been fantastic, but there are other ways to go about it. So I decided that unless it's something absolutely spectacular that we want to get in, or maybe even short, that's different. But I just feel it's necessary to do. We've got enough to worry about here. I don't have to worry about China. So that's the only reason. But there have been fantastic trades up and down, but I step aside. So a couple of things I want to look at. The IYT, the Russell, this is the iShares Dow Jones Transportation Average Index Fund. Makes a peak B in the monthly chart, going from 131 all the way to the 280 level. It's trading right now at 258 after dropping sharply to 245. Now, this is a technique that I'll be teaching as well. how do you draw these channels? Where trend lines? Everyone can draw trend lines because every trading platform has at least the tool of a trend line. You know, maybe you can't change color, maybe you can't change from dashed to single solid line or whatever it is, but you can do that. And this here shows you that from the 282.40 top, and this is the divergence that we've got in the market between the old school that said that if the Dow Transportation Average is going to all-time highs together with the Dow Industrials, well, it turns out, first of all, that there are no Dow Industrials anymore. The Dow 30 has maybe Boeing, it has a couple, maybe I'll force the issue and say Triple M maybe is an industrial. It just, there's very little in the way of industrials, right? It has financials, it has Home Depot, it's everywhere. Although in a way Home Depot could be, it's a cyclical, but in a sense it is industrial these days because of its importance, but that's really not the way it was formed. So you have a divergence because the Dow's gone to an all-time high and the IYT has dropped from 282 down to the lowest level of Monday a week ago. That was at 245. So we're talking about 40 points. We're talking about an 18% decline. I mean, a pretty serious decline. Here again, just like the XLE and just like ExxonMobil and the what we're looking at and the yields, the 10-year yield, it's also gone to a leg B. And it's gone out of the Chapman Wave inside track repellent zone, which is this little mini channel within a big down channel. The on-balance volume gave you a nice turnaround. Let's see, the MACD has finally crossed positive. You can see the histogram's green, the 0% line. The stochastic's only at 64%. It's still lagging. I suspect what we're looking at here is some kind of an arch formation like this. And then there'll be a retest. Doesn't have to be a retest of the 240s low, but it could be a retest of the trend line because once you break above it, that becomes resistance, now becomes support. So we're looking at the 258, 262 area as key support in this trading right now, the 258.18, if it's able to get to 262 in the next few days. So that takes me to a couple of things. Within sectors, you've got divergence. You've got a divergence. In the Dow, you can see that there's a divergence in what's working and what's not working. In the XLK, it's just a few select stocks that are taking it to new all-time highs. Not everything's working. Yes, correct, Ruby. Nice HG copper bounce, drop now bouncing. So I can do a little more on the copper in a moment. But look, this is right. This is V-shaped pattern, but you've turned this doji candle of 153.84 from mid-July into some kind of support area, and here it is at 154.44. So if it starts to, at any point, if the XLK, the S&P Select Tech Spider Fund, starts to trade under 152, that says, all right, now be a little careful. But so far, the weight of evidence says that buyers keep coming in. They buy the dips. I think today's going to be a day of rest. Yesterday should have been, but there was still excellent support. Let's see what happens today. It's going to be a very interesting session. Basil Chapman, Tiger Initiative Hour, early edition. I'll be back in a moment.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN. educating investors.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So, folks, a couple of things. I had a question in the den. Basil, I got a high trend yesterday, wondering if you did too. Yes, I did, a high reading, and that said that within 2 sessions, there should be a 9 to 11 point E-mini overnight rally, or a rally that helps the market. We've already said a huge rally. So yes, we've had that. The trend gauge has been fantastic for the whole since Monday a week ago. So high-grade copper question in the den. Look at this. The 1 minute chart went to a peak D, pulls back, pops to an E, pulls back, and then starts a brand new buy mode. Now it's in a leg E. It's making a peak E as we speak. All the techniques that I'm looking at right here, which still say that it's positive, see peak E, it starts to pull back. We're expecting that at a peak E right there. And now look at the 120-minute chart, sorry, the 10-minute chart. How important was that thick moving average that I spoke about earlier? This is what I'll be teaching tomorrow. If you want to join, you can. There's still time. And then you'll be able to review my 7-hour, whatever it was, webinar from Wednesday, two Wednesdays ago. Look, that became support. Now you've got peak A, peak B. I'll teach you about the peak C1, C2, C3. Look at this. And if you can identify this, if you're a trader of the E-minis, this is an amazing thing. It's over the last 3 to 6 months, it's happened so often. You get this sideways move with a flat top. It just can't break out, and it goes to peak C1, C2, because it couldn't go to that leg D. It just went right to exactly that price, and then it pulls back, and it goes to a C3. And then it pulls back sharply. And where does it go to? It goes to our friend, this thick line. And then it jumps up, and now we're in leg D because it broke above C1, C2. This leg D, in fact, could even turn into a D/B. I forgot. I didn't even see that because it was so close together. I'm so used to the E-mini with the quarter point move. This is 6.5, and this is 6.5. And this is 55. Aha! Look. So this is a gray A because it's under the previous peak. So this becomes gray A, and this becomes D because you pick up the previous peak, and you'd say, wait a minute, this could be a new leg B. It's either old leg D or a new leg B. There's nothing to do because the technicals are still strong. And I've drawn in the rectangle formation, and where is the target on the upside in the shorter term? We're only talking 10-minute chart. This is the high-grade copper continuous contract. If I can get my mouse to actually... Oh, did my mouse just run out of energy? Oh, Let me grab this mouse right here. There we are. I always have extra mice around. So look at this. Right there is the high that I'm looking at. 4.5815 is my upside target in the rectangle formation. Will it get there? I don't know. The MACD is good. MACD is good. Stochastics at 85%, 86%. That's good. The on-balance volume is lagging, and the relative strength is good. So you use all these indicators and say, hey, so far so good. There could be a bit of a pullback here, but so far so good with high-grade copper. High-grade copper up. No, now it's down 0.12 at 4.5725. So, and there's your peak E, just a nice digestive phase right there. So these are the techniques we'll be teaching. And yes, the high trend reading from the day before yesterday gave a fantastic move to the upside. And today it's already, if you're looking at we did that. We did the E-mini from the low today. Well, it was at 4 o'clock or something this morning. It's had a fabulous move to the upside. A couple of things I want to look at here is, I had a question about where did it go? Yeah, so in the Tiger YouTube, there's a statement by EKS that says, WEC Energy to buy 90% Illinois wind farm stake at $412 million deal. Folks, the information you get, I mean, both YouTube, the Tiger YouTube, and in the den is just invaluable. It is just so, should be called valuable. Invaluable sounds like it isn't valuable. It's valuable. We have such a wonderful web of information all the way through here. So I really recommend just try it out. The Tiger Den. Oh, there we are. The high-grade copper just broke to the upside. As I said, it was holding the support really well. It's extended. These are the techniques we'll be talking about live tomorrow, and we'll be doing it historically where we can draw in the trend lines, draw in the cup formations or the arch formations, and look how important this line is here in the E-mini in the 1 minute chart. And now we've gone positive again. This is leg, I think that's a peak actually. 50. So that's peak A, peak B, and we're about to try for leg C in the 1 minute chart. These are all techniques you can do live coming up tomorrow, 10 o'clock to 12, in my second edition of the series. So, yep, there it is. Leg C just started. So let's just go back to a couple of things I want to look at here. So for subscribers, we're only long. We have no short position right now. We need to see this play out. The buy the dips mentality is working. It has worked. You don't want to fight that. You don't want to fight the fact that the MACD in the XLK is just barely, but it has just about, by 2 cents. It's just crossed positive. The day's young. I can't even put a circle there because I have to wait for the end of the day. The MACD is finally helping you. So the stochastics at 83%. So there's no question that on every dip, the mentality is, you got to buy, but it's becoming more and more selective. And one of the things that I have discussed in great detail, I'll do it just briefly here, is that when in the stochastic, when there's a brand new move to the upside, but the stochastic hasn't gone to a very oversold condition as it did, say, back in May, around about the 10th or so with that turnaround, that's the kind of turnaround that's fantastic. But when you do this, and it comes from 45 or 50%, that usually says that when this particular rally is over, you've got to be careful. Careful doesn't mean, oh my God, crash. It means you got to be careful because you've run out of upside energy, but at the same time, you have to start to see where are the support levels. That's the most important thing. So at this particular point, all-time highs in so many areas, and we've got to deal with that. I want you to do one other thing, and that's the semiconductor index. SMHs came in, a question came in. Could I look? Oh, I didn't mention WEC Energy just on a whim. I mentioned, and also talk about Tiger YouTube. I mentioned it because I discussed a little while back. I said, I believe we were talking about the energy area. And what I said is there's going to be a point where the big guys, the Exxons, the CVX, Chevron, where the COP, this is ConocoPhillips, they have no choice but to start buying all the alternate energy in the alternate energy, not all of them, but going into those, they have no choice. And what's so fascinating here is that Otis Elevator I heard just a very brief thing yesterday, which was interviewed, and she's talking about new innovation where they can make an elevator that doesn't have to have that little canopy at the top. So you know what? In 1929, the reason why the Empire State Building was built to that height and so efficiently is because Otis Elevator had designed in 1928, they came out with this design that allowed the elevators to go to much higher heights. And that's also the reason why you've got the Burj Khalifa. It's fantastic.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So we're back, and let me just wrap up here because after this, you're going to go to Tommy O'Brien. Just a fabulous kickoff show. He does all the work for you. He talks about the fundamentals together with the technicals. It's really a terrific show. So stay tuned. And then, of course, you've got great program all day. And as I said, I'll be fortunate to be the guest conductor at 3 o'clock for the Tom O'Brien show. So this is the way I will be doing in my webinar tomorrow. I'm showing how these inside track repellent zones work. Look, yes, Tesla, it's up at 667, up 988 pre-market. It really has to climb above this and turn the resistance area into support. Look at the dreaded H pattern that held, and then a smaller one. There's the longer term weekly downtrend line. So these are the things that we'll be talking about. So in the meantime, back at the ranch, let's see what happens if after 1:30, 2 o'clock this afternoon, the Dow is able to even get to, it's down 98 in the futures, it was able to get to a minus 30 or better. That's a good sign that it's going to be able to close quite nicely. This is a very important session in many ways. So let's see how it closes. And I wish you the best for the rest of the day. We're about to sign off. Got great programming coming up. And don't forget, go to the front page of TFN and check out for my second webinar coming up tomorrow, Wednesday, 10 o'clock to noon, live. And we'll be going through a bunch of questions that came up. And people have been practicing different techniques, and I'll be discussing them tomorrow. And we'll do some live work, maybe even live trading. We'll see. Look at this. There's that phantom peak C that I talk about sometimes, and I call that a peak D with a question mark. Look at that sharp pullback there. But everything's still good. This is the E-mini 1 minute chart. But look at this. Here's the high-grade copper that we were talking about, still very good. Walking this particular line. What line is it? We'll be talking about that tomorrow. How can you stay in a trade a lot longer than you thought? Look, if you got in right here at 9 minutes past 8 o'clock at 4.5565, here you are at 4.579. So these are techniques we'll be talking about. Have a wonderful day. And question, if I could, I'll have to let you know in about a minute. Thank you for being here. Stay tuned. Great program.
Building wealth trading in the stock market seems impossible to most